Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group, coming to you every week talking about retirement, the do's and the don'ts, the good and the bad, and not necessarily the fun topics, Kim, but necessary and very important. So if anything resonates with the listeners today, I would say don't hesitate to reach out to us, whether today, next week, in 2 weeks, whenever it's convenient. 612-504-8400. Visit us online at havenfinancialgroup.com. We continue to have classes throughout the summer, and then our calendar of events all the way out through September and October. Again, education, all related to retirement. Kim, good to be with you. We got lots to talk about today.
Well, it's great to be with you as well. And Larry, it's amazing to me that we are where we are in August. I mean, we are we're pushing toward Labor Day weekend, which fortunately is a little bit late this year, so we do get that extra week. But having said that, I hope that people who are listening today recognize that any time is a good time to start thinking about your retirement. But if you are one of those folks who has said over and over, before the year is out, well, now might be the time to start thinking about it, because before you know it, we're going to be in the fourth quarter of 2026. So as Larry said, if anything resonates with you today, 612-504-8400. Going to talk about simplifying your retirement. Probably one of the ways to simplify it most readily, Larry, would be to get it started and to get a plan, right?
Start somewhere to get somewhere. Yes, that's for sure. And, there's always news. The financial world's always in some sort of flux. We're talking inflation, and then we talk tariffs, and then we talk Iran, and one thing is for sure, there's always some sort of uncertainty. There's always some, sort of change, and that really can affect people's retirement. But what we found is if you have a good, sound, airtight plan, you can mitigate some of these challenges, issues, and avoid some of the pitfalls that people fall into. So again, we're going to talk about consistent income and a variety of things during the show today.
Absolutely. So let's start with that right there, staying consistent, and then you ultimately are pretty stable in your retirement. As I said off the top, Larry says each and every week, it's never too early to start thinking about retirement and putting together a plan. And those without a plan find themselves suddenly without a plan, and that's not a good thing. So let's talk about staying consistent and what that really means. And early in your career, Larry, is probably the time to start staying consistent and making sure that you're saving and you're getting to those milestones that you want to hit throughout your working life.
Right. Start early. Earlier the better, and it may seem impossible because everything's expensive, but start somewhere and actually be disciplined. Keep putting money into that 401k. Retirement may seem way out in the distance, but certainly I can tell you, and not just me, but all the clients I've been able to help, we've been able to help at Haven Financial Group, where before you know it, you're there, you're in retirement, and if you're 5 years or less in, then it really hits home. So start early, but have a plan. What's the income strategy? Mailbox money. Balancing stability with growth is an important part of the long-term plan. And it's what we really get into at Haven Financial Group, the investment team, our certified financial planners, is getting people into a sense of financial security. And I just wanted to touch on, if listeners are going, oh, he's talking to only people with lots of money today. That is not the case. Small, medium, or large. We put a number on this in the industry, and I've said it many times on air that, do I need $1 million? Do I need $4 million? Forget about a number, because just this last week I had a couple in. They didn't have a lot of retirement savings, but they both had big pensions and they both had Social Security. They're going to be just fine. And then we have those that have a lot, and their lifestyle is way different, and the challenge is they might be running out of money. So it's not about the amount. It's what income do you have coming in that can give you the financial security that you want, and that gives you a real stable foundation and the confidence that you can cover those expenses, the expenses for the things that you want first, the things you need first, and then the things that you want to do in retirement, golfing, fishing, whatever it may be. It all costs money.
All right, terrific. So as we start with staying consistent and stable in retirement, let's talk about some of the things that could possibly help you do that or could throw you off when it comes to consistency and stability in retirement. One of the first things is market volatility. Market volatility when you are in retirement, and if in fact you have money in the market, and I think Larry will tell you that you should probably have a certain amount of money in the market, that can be a problem for folks. So how do you mitigate that risk?
Yeah, the sequence of return risk, the timing of the market, the element of time as it relates to your retirement. We're very cognitive of market volatility. We like the stock market. We manage in the market with Schwab and Fidelity, but we want to be reasonable and we want to put things in perspective. What's your risk assessment? Wealth protection strategies can mitigate some of these risks that come along with market fluctuations, preserving capital during these downturns. We all want to get the biggest returns, of course. So offense is important, but what is the old saying? Defense wins championships.
hmm
Now, that truly is the case, and we kind of use that approach to some degree as we're doing retirement planning is, what are your income sources? What stability does it give you? Do you have a balanced approach of good, strong liquidity, which, I've said this, that for retired couples, we like to see at least 50 to 100 grand in a liquid position. What is your risk level in the stock market? And do you have any investments that give you some principal preservation where if the market is volatile, you have all the options? So again, a very, very balanced approach. We're not against growth, but we inside the 20-yard line, which is retirement really,
hmm
that's when defense is actually more important than offense.
Sure, absolutely. As we continue to talk about this in the framework of staying consistent and stable in retirement, one of the ways, I guess, to stay consistent and certainly to stay stable is to put your dollars in fixed locations, like possibly a fixed annuity. That may not always be for everyone, but it could be an option, yes?
For sure, for sure. We like people to get information on all the investment options that are out there. Some are not for nothing's for everybody. It's not one glove fits all. There's similarities within portfolios that we're going to have with diversification, stocks, bonds, et cetera. But is a fixed annuity a good strategy when it comes to protecting principal? It can be. We can use it as a bond replacement. It gives you some upside potential. It gives you principal protection. It can maybe protect against some inflationary measures. But there's always a downside to some degree. What are you giving up? Is it some of the growth? Because there's no perfect investment. I always say we all want the highest returns. We want 100% liquidity. And God forbid, I don't want to pay anybody. Sign me up for it. Oh, that's right. It doesn't exist. So we look at this from, okay, how does it fit into my portfolio? I don't maybe want to gamble with all of my money in the stock market. Okay, that makes sense. Well, then what percent do you not want to? And we work backwards from there, maybe as a bond replacement. And I say that because a few years ago when stocks were way down and bonds were way down, a client that had a fixed annuity or fixed indexed annuity either didn't lose a penny or maybe made 3 to 5% when stocks and bonds were down. So there's an upside. What's the downside? But I always come back to get educated first,
Right.
because there's lots of confusion when it comes to annuities. Do you use it for accumulation? Do we use it for predictable income? Maybe you're listening and, hey, you don't have a pension. I don't either. I won't have. My wife won't have a pension. So how do we build our own pension? Annuities can be used for income. They can be used for long-term care. But what are some of the key words that you should understand is annuitization, income riders, terms. Certainly with some of the annuities, the fees are extraordinary. Just had one this past week, and it's one of the highest I've ever seen. And when I actually showed him what he's paid in fees the last 8 years, he just about fell off his chair. And
Mm.
that's not abnormal, but there was a lack of understanding. That's what we want to avoid. We want to make good, strong, educated decisions.
Sure. So while we've just talked about one example of what may keep you consistent and stable in your retirement. Obviously, everyone's retirement is different. Everyone's situation is different. And there are many different ways in which to achieve consistency and stability in retirement. And if you're looking for a partner who can help you with those many ways, give you suggestions, take a look at your individual situation and make some suggestions that might bear out better for you in the end, then give the folks here at Haven Financial Group a call. 612-504-8400 is how you reach them. Again, that's 612-504-8400. Give them a call. Tell them you heard us here on the radio. You'd like to come in and talk about a retirement plan that is consistent and is comfortable and stable for you. When we come back, the role regular income can play in your retirement. Stay with us, everyone. This is the Haven Financial Group Radio Show.